prices are not coming down at all. If anything, rates and prices are going to do nothing but come up. So if we're not being able to communicate that, we got to own our part in that and make sure we turn around and show, not tell, because it's facts over fear. Hey guys, it's Brian Icenhower, and we're going to talk a little bit today is how national economic conditions are impacting the real estate market in 2023. I mean, we've seen a lot in the first quarter of 2023. It was a very volatile first quarter. And now as we're moving into that spring quarter, we kind of look back and say, wow, I mean, we've seen interest rates come through. We've seen low sales volume. We've now seen banks fail, economic uncertainty, a lot of pressure on the Federal Reserve to stop raising interest rates, and concern as to whether they're going to start again and when they'll start again, concerns about inflation. All of those things. And what that does, of course, it makes it tough on us as real estate professionals because, a big part of our job is to advise and consult our clients, our sellers and our buyers who are concerned about making moves in this market. And we know as agents, at least we better know, real estate prices, investing in real estate is always a good thing because real estate's a long-term investment, prices go up over time. So, we need to be able to convey that. We need to give our clients confidence to move forward, just to live their life and fulfill their dreams because they want that house for a reason and they need to move for a reason, and B, because they get more and more invested in real estate, which over the long haul is very good financially for them. So we gotta understand, know those things. But one of the things that becomes a big problem for agents is how do we convince them? Because they've all got their opinions, right? Everybody's watching the news and clicking on things and on social media and hearing things, and there's so many crazy different things out there. How do we sift through all those fears and tell them the facts? And the way we do that is we don't tell them, we show them. We always want to show rather than tell, okay? So what I'm going to do is I'm going to show you some things right now. And that's what we want to do, is we want to be able to convey the information. We actually provide these graphics to all of our coaching clients at Icenhower Coaching Consulting. We make them very available to them because we do want to help them do their job and move through it. And I'm going to show you too some of these graphics that'll help give you that confidence and help you show your clients that they should move forward with confidence as well too, and give them some clarity in their mind about what's happening. So I want to start with that. There are two different markets out there that the press often convolutes. There's real estate sales, which matter only to us in the real estate profession. We care if there's a lot of sales or not, because that means we're going to make money. But the public, buyers and sellers, your clients, they don't care about how many sales there are. They care about the other real estate market, which is prices. Are prices going up or down? That's what they care about. Maybe interest rates too. That's where the media gets very messed up. They take puffing to a level of misrepresentation oftentimes with their clickbait titles of their articles or of their videos. They'll say things like housing market is crashing. And that might mean sales are crashing, but prices aren't. So they'll do a lot of that. And if you read deeply through the article, you'll start to see they're really talking about sales, not prices. And quite frankly, most people don't read through the article. The public doesn't. They operate in fear at a real high level. So when they do that, it's up to us to kind of get rid of that fear. People just don't. They just move quickly. We kind of have a attention deficit problem in today's society, I guess. And it's up to us to sit down and kind of consult them. That's our job. And that's the neat thing about being in real estate is they need us again. They don't think they know it all. And if they don't, and they do think they know it all, then you need to show them, not tell them, so you don't get in an argument. Say, hey, I just want to show you this. So let me show you a couple of those. The first thing I want to show you is this. And this is something that's probably not super important to show them, but it does tell them this. This is the amount of home sales in the United States every single year. And you can see, we hit a real big number back in the housing boom in 2005. And then, of course, we had a whole bunch of bank failures and things like that, and the economy fell apart. Sales went way down. Agents didn't make as much money. There was less money to go around, less sales, less commission. And then sales got real healthy again. And for the next decade, they got very healthy until they spiked during the pandemic. During the pandemic, had a lot of sales again. And then in 2002, they dropped again. Again, that's primarily due to rising interest rates scaring everybody in the short term, right? So sales dropped tremendously. Now, is it really that low? No, it feels like it to everybody because that's a very steep one-year drop that we haven't experienced all the way back since, that Great Recession buildup there before that occurred. So that's what's got everybody spooked. And that's where you're seeing all these negative housing articles. It's usually based around sales. And so I do show people that so they realize a lot of what you're seeing and hearing, it's based upon sales. It's not based upon home prices. So it's really important that we show that to them, we articulate that and explain them and show them. Now we've proven, oh, I see. Okay, so there's a lot of confusion there. And a lot of that has to do with interest rates. And if they do get scared about the interest rates, it's very important to show them something about the rates to, kind of put their mind in. This was, at the end of March, we had interest rates, hovering around 7. This changes all the time, but you can kind of see here that, over the grand scheme of things, rates are pretty dang low. I mean, the average over the last 50 years is, right around 8%. Relatively speaking, we're doing just fine. In fact, if you look in the 80s, when housing prices went up and agents made a lot of money, we had interest rates peaking out at 18%. I think the average interest rate in the 80s was probably around 11, 12%. Agents made a lot of money. There were lots of home sales. Home prices went up. It was a very prosperous time in the 1980s. That was the proverbial Reagan years. Lots of people made a lot of money. Rates didn't stop that. When rates slow people down, it's when they move up dramatically, like they did in 2022, second half of 2022 and early 2023. That's when people get polarized because they don't know what to do. But once they get used to the new rates, they start buying and selling again. And that's kind of what happened back around, 1979, 1980. They went up, everybody freaked, sales dropped, and then people got used to them and everything was fine. So that's kind of how that works. So put it in perspective. They need to see that. They don't want to hear that. Understand whatever happens with rates. People like to try to predict rates. And one thing that I've learned over more than a few decades in this business is don't try to predict interest rates. If you could predict interest rates, you'd be a gazillionaire. That's why most people don't. There's lots of different numbers that impact that. I try not to predict too much there. So that's one thing, but I can predict prices, housing prices all day long. And housing prices look a lot better than interest rates do. I can tell you that. And if we take a look at that, and this is a very important thing to show your clients, is where we look on housing prices. Now, relatively speaking, over time, I showed them the chart where sales volume dropped, but yet they've been seeing all this clickbait out there and these headlines about how housing prices are crashing. And then I show them, look at annual home prices in the United States. 2022, they went up tremendously. And the projection in 2023 is to continue to stay up. Do they drop a little bit based on the pandemic highs? Maybe, but still moving up in a big, big way. So we want to show that trend over time. Even in the Great Recession, it looks like a little hiccup. So it's really important that they see that, you show them that, and show them the long-term trend so they get things relative. It's really hard to argue back and forth, and they'll start saying things like Russia and China and all this crazy stuff that don't impact housing prices, okay? They don't. Housing prices are impacted by supply and demand, and we need to show them that too. And that's it. Demand can be impacted a little bit through mortgage rates, sure, but supply is what matters even more. That's why we call it supply side economics. So housing supply matters. Probably my favorite show and tell graphic to show them is the line item chart. It's just showing them over time going all the way back into pre-1960. You can see housing prices have just steadily gone up. And despite all the different things that have happened, 9/11s and great recessions and all the different things, all the different economies falling, all the different bank failures, everything that's gone on, COVID, pandemics, every single election, every single war, Iraq, Baghdad, everything, Kuwait, you name it. All that kind of stuff, all those wars. We're getting back into Vietnam in here and housing prices went up, guys. I mean, all of that, throughout all of that, all the, 18% interest rates, prices just kept rolling up. And that's what they've been doing despite all this. The shaded areas on here show all the different recessions we plowed through. No big deal. The big one, the Great Recession, it looks like kind of a hiccup in the grand scheme of things. That actually, housing price drops actually caused that recession. That's one of, and that happens about, we see a significant housing price drop about once every 100 years. The Great Depression and the Great Recession. And that's based on supply. That's always based on supply. There's not enough houses. There's too many houses for sale. So prices have to correct. And then it only usually lasts a few years before supply and demand equal out. And all of a sudden we're back to getting equity again. And that's all that happened here too. And you can see in 2020, 21, 22, 23, it's been a steady incline despite all the negative clickbait out there. So we want to show that. To me, that needs to be, all these charts really need to be in your buyer consultation packet. They need to be in your listing presentation package. You got to be able to show them to give them confidence, especially right now. Now is when they absolutely need you in a very, very big way. So proving that's really important as well. Okay, proving that's really important. I'm going to show you one more with regards to those home prices that I think is important you show here. And it's really because what we're showing, this is the annual appreciation each year, right? So every year, here's the percentage of home price increases, right? So throughout the 90s, we saw healthy home price appreciation around 4% per year on average. Then leading up the housing boom, leading up to the Great Recession, we averaged almost 9% per year over that time. Then we ended up dropping. This was a big period for the most part, on average about 4.4% for those 5 years. But since then, it's been, glory time, right? We've been averaging 6.4% appreciation for almost a decade. And then during the pandemic, big jumps. This is important because despite all the negative news in 2022, we actually had home prices go up 10%. Despite all these clickbait about sales and interest rates and recessions and all that stuff, we had home prices go up 10%. And we're, almost every projection is for more home price increases in 2023. Why is that? Because only one thing matters with regards to economic conditions as they relate to home prices. Just one thing, and that's the supply. It's why we call it supply side economics. Even if buyer demand goes down because of affordability, because of interest rates, all the different things they say, everybody moved during the pandemic, all those different things, guys, demand's always going to be there. We make babies, our population grows. Number two, we get deaths, we get divorce, we get job transfers, we get people that move, we get bigger families, need bigger houses, want to move to different neighborhoods, different school districts. People want to move. They always do. So don't think that everybody's just going to hole up and never move. It's never happened in the history of man for any sustained period. We are at least locally nomadic, right, as creatures. So it always happens. That's why demand is not nearly as important as supply, because we know if there's too low of a supply, prices are going to go up. And guys, that's exactly what we've got in 2023. What's kind of funny is if you look at this chart, you can look at our annual inventory of homes, right? You can see the dotted line. That's the difference between a buyer's and seller's market in the United States, right? That's 6 months of inventory, meaning that all the homes in your MLS at the current rate of sales would sell over a 6-month period. If you get more than 6 months of inventory like we did during the Great Recession, you actually start to see buyers in control of negotiations again, and prices could drop. They could drop. However, since that time, again, the 100-year occurrence, we have just had declining home inventory. And here we are, the second lowest amount of housing inventory in the history of, the recordable history of the United States. And they're saying inventory is going back up. Guys, inventory is not going back up. 2022, we had a few more homes for sale, but it's dropping back down again in 2023. We're seeing even less homes, more multiple offers across the country, especially when we're looking close to the median home price. Now, if you get in the ultra luxury markets, you might have a few more homes for sale up there. It's a little different. But if you're anywhere close to the median home price, even sniffing it, you're going to see multiple offers typically in the United States right now, because that's what we've seen for the last 5 or 6 years, going all the way back to like 2017. That period of 2017 through 2023, it has just been low, dangerously low, red hot seller market inventory. And there's no difference here. There's just no supply. So it's really important to show, relatively speaking, people are saying, well, look, inventory is going back up. Not really. It's kind of hard to get much lower. So you are going to see it bounce along. It's pretty important to show that. That's a very important thing to show, because if you're trying to convince people of that, there's a lot of realtors that are part-time out there that don't know economics, that don't watch the news. You got to show them, what you're talking about, and that you've been engaged. You got to prove it. You can't just talk and try to convince. It's really important that we do that, guys. So I want to make sure you know it. I want to make sure you see it. One of the reasons I want you to do is be able to articulate to them, why is inventory so low? That's real important. They got to know why. Why is it so low? Why are we building? Well, here's what happens. You look at housing inventory over the course of history. We can show you that, leading up to the Great Recession, the first time around, You look from 1991, we just start building way above the average, long-term average of new construction homes built, residential homes built. You can see that black dotted line across the middle of the screen there. That's your average over the long term. That's what's deemed needed to keep up with buyer demand. And we just started building at a very high rate in the early 90s, man. It was crazy. I mean, there was so many more subdivisions in so many more cities than there were now. There's big national home builders all over the place competing. Most of those have gone away now. And then it got really crazy. We had 4 consecutive years of the highest amount of homes built in the United States ever, oversupplying the market. People will talk about what caused the Great Recession, low loans. People just naturally like to go with buyer demand on things, all the loans and all that and giving away free money and all that. And again, that all impacted it. That's what it was able to make people buy this. But really, they would have, we wouldn't have had a recession if we didn't overbuild. All that would have kept going and people would have kept getting richer than heck. And, there'd probably been other problems. But quite frankly, it was the oversupply. It's always the oversupply in any industry, in any market that causes prices to go down. Okay, that's the very foundation of economic principles with supply side economics theory. Okay, so you can see we built 4, and then all of a sudden every builder went bankrupt, builders became spooked, and for 15 years since the Great Recession, we've been building way below our average, and now in 2022 and 2023, we're even building less. Why? Now we got builders are really afraid, bank financing's tightening up, inflation's causing the cost of materials, the cost of builds going up. Builders are building one house at a time these days. When they used to build multiple houses at once, they'd pour, 20 concrete slabs and frame 20 houses. Now they're building one at a time. They're only building on spec. So we're actually getting worse with supply. It's tightening, which is more inclined to make housing prices go up. So that's what happened. I mean, we got way behind. That's the real story. That's the focus. That's why all top investors out there, you got your Warren Buffetts and your, Berkshire Hathaway, they know this. You've got Jeff Bezos with his real estate investment trust. You have JP Morgan buying up residential houses. You have all these institutional investors. They're just buying all these houses up because they know there's not enough supply. They're hoarding this valuable asset. I always refer to them like blood diamonds. Everybody wants the diamonds because there aren't that many of them. It's like gold. There's a limited supply of gold. If you have the most of it, you're going to have lots of money. And people are doing the same and investing in real estate. Who's not doing it? Your clients. Why? Because they're not as smart as Warren Buffett. They're firemen and they're teachers. They have other jobs to do. They don't understand economics. That's where we come in. We have to show them, right? Not tell them. We have to show it and prove it to them. We need to do a better job of communicating and articulating. And the way we do that is showing them facts, not allowing them to fall victim to fear. So it's facts over fear, guys. And it's our job in real estate to make sure our clients get a chunk of the American dream and get invested in real estate. We're going to be the primary source of wealth. We're going to be the cause of it because it's well known that, the vast majority of people's assets is the equity in their home. By the end of their life, that's where the vast majority of their income and their assets come from, is in real estate. So we got to get them in the game so they actually have this wealthy, healthy life to provide for their families and retire and achieve that dream, right? So that's our job. Facts over fear, guys. We got to show, not tell. Let me show you a little bit more. I promise we're wrapping it up soon. I want to show you about another reason for it is look at the homes built versus population growth over time. And these are decades down at the bottom, right? So you see in the 1930s, that was the Great Depression, was the last time we didn't build many homes because no one could afford to or find the labor and lumber. And then we definitely could find the labor. And then there's all these babies born, right? So we had all this growth. That was the last time. But ever since then, we've always built enough homes in the 1940s, 50s, 60s, so on and so on, over those 10-year periods, we've always built just about as many homes as we had population growth. Almost every decade, all the way through the 2000s, we did the same. But then the Great Recession happened at the end of the 2000s. And look what happened from 2010 to 2020. We literally almost had 5 times the amount of population growth as we did new homes built. Never before has buyer demand gotten so out of whack where we just shortened supply. It took us 10 years to create that problem. Since 2020, in the 3-year period since then, we're getting even further behind. Do you know how long it's going to take to dig out of that hole? Do you know how long it'll take to build that many houses? I mean, heck, it's already taken time just to give people confidence to build that many houses. We have local governments and even the federal government spending money to try to build houses just to impact this supply and demand. I mean, they're drops in the bucket. They'll never do it. But that's why you're seeing so many people gobble it up, because they realize prices can't go down for a long time. Certainly not significant, not when there's any houses out there. It's going to take forever because we're still making babies. That's not going to stop, So we keep making babies. These babies got to buy houses. I mean, there's babies here in 2010, that, are going to be buying houses in 2030 and 2035. It could be a very long time before we see housing prices drop. And that's what happened back in the 1930s. It got so out of whack. It was 100 years before we saw oversupply. It just took a long time to catch up with you, and you get that far behind. It takes a long time to build houses. You got to buy land. You got to get it approved. That takes years. Then you got to put in streets and utilities and build houses, and you got to sell them, and builders are scared, and blah, blah, blah. Well, most people are saying we're at least 5, 10, 20 years before we see a significant price drop to make anybody feel like they should wait. We should never be waiting, that's for sure. I showed you that graph, a couple of graphs about how prices just increase over time. When's the best time to buy? Man, at the start of the graph. If you can go back in time, do it. If not, the next best time to buy is right now. Then the next best time is tomorrow. We got to buy quickly to get ahead of this thing. That's kind of the key here. So it's really important that we understand that, and we know that, and we show that. With regards to new home starts, I showed you how those have been going down as well too. We have data on that. I always like to keep data on everything, but same deal here. You can see home starts, again, this is kind of the tail end of that Great Recession. And then we just stopped building below our long-term average line. Then we actually caught up a little bit in 2021, and then boom, we're right back down. And 2023 is looking even worse because we just, bank tightening, interest rate tightening, scared builders, supply chain issues, inflation, cost to build, causing everything to go up. So don't see supply starting to even make up ground anytime soon. So really important, we see that, we show that, we explain that over time. Now, the last point I want to make, and this one a lot of people don't know, so I'm going to show one. I want to make sure you see this one. Last chart I'm going to show you. This is new home sales, okay? And you can see again, the new home construction has gone down because we're just not building as much, right? The average long-term home sales, when you throw in resale, keeps going up. Right? And the average price of resale keeps going up. And same with new home sales, price goes up, but the amount of actually new home sales has been dropping. And that's important. Here's why, guys. Here's why. Not just supply and demand. People talk about the differences in all the bank failures. Like when people say, hey, what's the difference? All these banks are going under, and all this economic uncertainty and all this kind of stuff. It's going to be just like 2008. And it's not, because of supply and demand. Yes, that's number one. Number two, there's a big difference. Back then in 2006 and 2007, new home prices were actually below resale home prices. It was the first time in forever that happened, where builders were able to build house prices below resale. And then resale started to tank, because then resale prices had to come down to compete with new home prices. There was too many builders competing, and they were slashing prices and providing incentives. So the median new home sales price for the first time ever was below the median resale price. That's what really started to push the prices down. Most places in America, almost everywhere, new home prices are much higher. I mean, almost double. New home is considered higher than what you can get the average median resale price for. Why? Cost to build, inflation. It just gets more expensive to buy and build houses these days. They cannot build houses for cheaper. The only way you can do that is mass produce. We don't have builders mass producing like we used to, building 100 homes at once, 200 homes at once. And even then, I don't know where they're getting their lumber and their nails from and any of that. So that's how we know that, the home builders can't bring resale prices down. New construction, that's another major difference out there a lot of people ignore, because that in most areas of the country back in 2006 and 2007 is how we saw prices start to drop. And when they started to drop, that's when the banks started failing in 2008.
We saw prices started to drop in 2006 and 7 because we saw home builders all of a sudden reducing. They had to sell all that inventory. They've been building all these houses, framing 100 homes at once. They weren't selling as fast. They owe money on that, so they got to move that. So they would slash those prices because they got to pay off loans and debt on all those properties. They stuck their neck out a little too far, and that started to drive all of those prices way, way down. That is nowhere near happening right now. New home prices they can't build them fast enough to keep up with buyer demand, and their prices are much, much higher than I've ever seen them. Actually, in 35 years in this business, home prices are new home construction is much higher. So understand those are two big differences, and it's our job to convince our clients of that, to give them confidence so they can get their dreams, so they can get where they need to be. So I hope this helps. That's the main difference. So guys, for you guys too, stay positive. Yes, home sales are down. We got to roll our sleeves up, and we got to get going and generate income to earn our unfair share of the commission. That's for sure. However, as far as home prices and your investments and your rentals and your clients' rentals and and their home and their new home purchases, man, they gotta go. They gotta go, because we know home prices are not coming down at all. If anything, rates and prices are gonna do nothing but come up. So if we're not being able to communicate that, we got to own our part in that and make sure we turn around and show, not tell, because it's facts over fear. All right, guys. Thanks again.